Today we'll have a session on redemption of preference shares. It's one of the small and simple topic in your syllabus. Uh, to begin with, we'll understand the basics of preference shares. Then we'll talk about few legal provisions, and that will be followed by certain additional details like accounting entries, etc. And we'll try to work on few of the questions, if possible, if time permits today, on the redemption of preference shares. Just to give you a background, in same five, you have done a topic called as buyback of shares. Now, buyback of shares basically covers both equity shares as well as preference shares. A company can buy back either of them. Conditions are slightly different, but basic logic remains the same. That whenever you are planning for a buyback of share, one part is of course the price discovery. The price has to be fixed in a particular manner, and the second part is either you have to go for a fresh issue or you have to use the divisible profits of the company. Here also we have more or less similar logic. Either you have to go for a fresh issue or you have to go for the use of divisible profits of the company. So we'll first understand what do you mean by preference shares. Can anyone tell me what do you mean by preference shares? Does it carry the same features as equity shares or is it slightly different? Yes, anyone? What do you mean by a preference share? How it differs if so from equity shares? Yes, anyone? Can someone tell me?
It's different. Uh,
Yeah, it's different. Yeah, but what are the distinguishing features? Yes, Om, you are saying something? Rida?
I think when the interest is being paid back to the shareholders,
Mhm.
the preference shareholders get a preference over normal shareholders. I
Okay,
think.
okay. What else? See, there are two important privileges that preference shareholders carry. First, they get a dividend in preference as compared to the equity shareholder. So whenever there is a profit, because in the situation of loss, you can't pay dividend. So whenever there is a profit and whenever the company plans to pay the dividend, the first preference goes to the preference shareholders. And after paying dividend to preference shareholders, you can pay the dividend to equity shareholders. So they enjoy the privilege in that particular regard. Secondly, when the company is under liquidation, when the company is under winding up proceedings, then you have to first settle the payments of preference shareholders. So there also they are privileged to get the first payment as compared to the equity shareholders. So after you pay off all your external liabilities, you can pay preference shareholders and then you can pay equity shareholders. That's the process. So basically they enjoy two different privileges. One privilege is preference in payment of dividend and second privilege is preference in repayment of their capital when there is a liquidation. One more clear feature of preference share is they carry a fixed rate of dividend. So you may have 12% preference shares, 15% preference shares. So that rate of dividend is always fixed at the time of issue of preference shares, unlike equity, who will get the dividend based on the rate to be determined by shareholders in the annual general meeting. Now, when we talk about preference shares, you may have different types of preference shares. We'll just briefly touch upon them and then we will go to section 55. There is something called as redeemable and non-redeemable preference shares. So redeemable preference shares are those which will be eventually redeemed as per the terms and conditions. And non-redeemable preference shares are the ones which cannot be redeemed except in the event of liquidation of the company. But if you go to the Companies Act current provisions, it does not allow you to issue non-redeemable preference share capital. It has to be only redeemable preference share capital. That is a current requirement of company law. Then you can have what is called as cumulative and non-cumulative preference shares. Whenever there is a profit, the company will pay the dividend to the preference shareholders and then equity shareholders. But suppose there is a loss, then company cannot pay the dividend to the preference shareholders as well. But suppose you have cumulative preference shares, then the right to receive the dividend is accumulated or carried forward to the next year. So next year, whenever you have profits, the company will pay dividend of earlier year also and current year also, because they are having a right in terms of cumulative preference shares. Non-cumulative preference shares, there will not be any such right. In case of non-cumulative preference shares, it will be basically the year in which they uh, have the profits, the company has the profits, they will get the dividend. Otherwise, they will not be eligible for any kind of dividend in subsequent year, even though it is in arrears. Whenever there is a cumulative preferential capital and whenever there are arrears of dividend, if you recall Schedule 3, Companies Act, format of financial statements, balance sheet, we provide a note to the balance sheet saying that there is a contingent liability in respect of arrears of dividend on preference shares. So that kind of disclosure is required when we go for cumulative preference shares and the corresponding arrears of preference shares. Then there is one more type known as participating and non-participating preference shares. As I told you, the preference shares have a fixed rate of dividend. But if you have a participating preference share, then over and above your fixed rate of dividend, you may get additional dividend depending on the profits of the company. But in case of non-participating preference shares, there is no such thing. You will get only the fixed rate of dividend and nothing beyond that. Similarly, for participating preference shares, when the company is under liquidation, if you have excess balance available after payment of all the external liabilities, the participating preference shareholders may get some extra payment over and above the face value of their shares, whereas non-participating preference shares will not have that particular option. And then you have what is called as convertible and non-convertible preference shares. The convertible preference shares will be eventually converted into equity shares as per the terms of the issue, and non-convertible will continue to be a part of your preferential capital till it is redeemed. So these are basically the conceptual framework regarding features, etc. of preference shares. Has everyone followed the discussion so far? Yes. Any difficulty? Any questions so far? What we discussed just now?
No, sir.
Okay, fine, fine. Okay, so we'll move on. Okay, now we'll come to these notes. I'll share a copy of this once our lecture is over. Now, when you look at the Section 55 Companies Act 2013, it gives you a legal background as to what are the requirements of redeemable preference shares and its redemption. As of now, as per this Section 55, you can issue only redeemable preference share capital. In other words, the issue of non-redeemable preference share capital is not allowed as per Companies Act 2013. Not only that, it also says that you can issue the preference share capital where the maximum period of redemption cannot exceed 20 years. So whenever you issue preferential capital, you have to redeem it within a band of 20 years. You cannot stretch it beyond 20 years. There is one exception. For infrastructural projects, you are allowed to have a redemption period beyond 20 years, but then there is another regulatory framework which will govern the redemption part. But essentially, for a general reference, maximum period of redemption is 20 years. Now, whenever you redeem a preference share capital, or for that matter, earlier when we discussed about buyback of shares, suppose you either buy back or if you redeem the preference share capital, there is the impact on your share capital. There is an impact on your paid up share capital, and the impact is your paid up share capital stands reduced. Now, Companies Act per se does not permit any reduction in paid up share capital except in the event of reconstruction and those kind of things that we have seen in the last semester, internal reconstruction. Otherwise, generally, reduction in share capital is not permitted. So when you redeem the preferential capital, it's bound to lead to redemption. It's bound to lead to reduction in the paid up share capital. So therefore, what company law says is you have two options. Either you use divisible profits and use it for redemption, or you go for a proceeds of fresh issue, eligible shares for a fresh issue, and out of these two, or a combination of these two, has to be applied when you go for redemption. So when you go for redemption, you have to think of whether you are going to go for a fresh issue of share capital It can be either equity or preference, or whether you are going to make use of available profits, but out of available profits, only divisible profits can be used for this purpose, or you can use partly divisible profits and you can use partly proceeds of fresh issue for this purpose. Both the options are available, either fully from divisible profits or out of proceeds of fresh issue, or third possibility is combination of these two things. Now we are using the word divisible profits over here. So what do you understand by divisible profits? It implies profits which are available for payment of dividends. So basically we refer to them as free reserves, or the profits which are available for distribution or payment of dividend as per the law and as per your articles of association. Uh, Towards the end of these notes, we'll also discuss there is a list of what you can call as divisible profits and what is not termed as divisible profits. So we'll understand those things when we go to the list of divisible profits. Have you understood these 2 or 3 points so far? One was you cannot issue non-redeemable preference share capital. You can have maximum redemption period of 20 years except infra projects, and redemption has to be out of divisible profits or out of eligible issue, fresh issue, or combination of both. Any difficulty so far? Yes? Shall we proceed? Yes or no?
Yes, sir.
Okay, fine. Now
Yes,
coming to
sir.
the fourth point, whenever you are redeeming the preference share capital, one of the precondition is it should be fully paid preference share capital. If it is not fully paid share capital, fully paid preference share capital, then you have to take couple of steps to rectify the situation. So what are the possible things? One situation is you are already called up the entire amount on preference share capital. That means your preference share capital is fully called up. But some of the shareholders have not paid the amount, which we call it as calls in arrears. So to make it fully paid up, you have to ensure that these calls in arrears are realized. So you have to chase the shareholders, ask them to pay the money. And once they pay the money, once your shares are fully paid up, you can redeem those preference shares. Now, suppose in spite of follow-up, they don't pay, then what is the recourse? Another step you can take is to forfeit or cancel those shares. So if your preference share capital at the time of redemption has calls in arrears, then you should recover those calls in arrears. If the shareholders fail to pay that money, the only option is to cancel those shares. We call it as forfeiture of shares. So after these shares are forfeited, then you can redeem rest of the preference shares. Suppose you have 1 lakh preference shares. There are 1,000 preference shares which carry calls in arrears. The company gave them enough notice to pay the amount, and the shareholders have not paid the amount in respect of those 1,000 shares, some calls in arrears which are outstanding. So company can cancel those 1,000 shares. Now, in that case, when the company cancels that lot of 1,000 shares or forfeits those 1,000 shares, once that process is done, you have to redeem remaining 99,000 preference shares. So those shares will be cancelled where there is an outstanding amount as calls in arrears, and remaining shares will be then eligible for redemption. If those shareholders pay that amount due on 1,000 shares, then you can redeem the entire lot of 1 lakh preference shares which are due for redemption. Another possible scenario is the company is yet to make final call on these shares. So suppose your preference share capital face value is 10 rupee per share, but the company has so far called only 8 rupees per share, and the final call of 2 rupee per share is not made so far. Then the company has to make that final call of 2 rupee per share, receive the entire amount. Thereafter, the shares will become fully paid shares, and then you can proceed with the redemption of those shares. So when we talk about fully paid up preference shares, these are all possibilities that you have to bear in mind and act upon it accordingly to ensure that the shares are fully paid up shares. Have you understood fourth point regarding fully paid up shares? Yes.
Yes, sir.
Okay. Now we are saying that you can do the redemption out of profits, out of divisible profits. Now, whenever you are using divisible profits, you have to create what is called as capital redemption reserve. Same methodology we used to use when we discussed about the buyback of shares. There also, if you do not want to go for a fresh issue of shares, then you should have created capital redemption reserve out of divisible profits. So here also, when you are using divisible profits as a source for redemption of preference share capital, then you have to create capital redemption reserve. Now there are two, three possibilities here. First possibility is redemption is fully out of divisible profits. That means you are not planning for any fresh issue of share capital. There is no fresh issue of share capital. So in that case, your capital redemption reserve will be equal to nominal amount or nominal value of shares to be redeemed. So face value or nominal value of preference shares under redemption will be the amount of CRR that you have to create if you are not planning for fresh issue. If redemption is partly out of divisible profits and partly out of fresh issue. So whenever you are planning some portion of fresh issue for sourcing as a source for redemption of preferential capital, and you're also going to use the part of divisible profits, then CRR will be equal to nominal value or face value of the shares under redemption minus proceeds of fresh share capital, proceeds of fresh issue. Now, when we are using the equation here, or we are using a formula, CRR is equal to nominal value of shares under redemption minus proceeds of fresh issue. We should also understand what is meant by proceeds of fresh issue. Firstly, this fresh issue has to be for cash. It cannot be for a consideration other than cash. It has to be a fresh issue for cash. Now, when you say the fresh issue will be for cash, there are again a couple of possibilities. Either it is at par or it is at premium. So whenever you're looking at these two possibilities, your calculation will have to be factored in accordingly. So proceeds of fresh issue is equal to nominal value of fresh issue, even if it is either at par or at premium. So whenever you are going for a fresh issue and whenever you are doing the calculation of CRR, we are concerned with only nominal value of fresh issue, which is either made at par or at premium. We are not going to the amount of premium which you have received for calculation of CRR. That is not permitted. Only the face value will have to be considered for this purpose. Now, whenever you create CRR, what is the purpose of CRR? CRR can be used only for issue of fully paid bonus shares. Like in buyback of shares, we have seen that whenever you create CRR, you can issue fully paid bonus shares out of such CRR. So here also, the only purpose you can use it for is issue of fully paid bonus shares. Partly paid bonus shares will not be allowed to be issued from this. It's only fully paid bonus shares. Now, if you are looking at redemption at premium, you are going to pay extra amount over and above the face value of share capital under redemption, preference share capital. You are going to pay some premium on redemption. This premium also has to be provided out of divisible profits only. So free profits, free divisible profits will be used even to provide for redemption premium. You cannot use current securities premium account for this. It has to be out of divisible profits only. There are a couple of exceptional situations where you can do that, but we are not getting into those exceptional situations. We will use only divisible profits whenever we are making the provision for premium on redemption. When preference shares are partly paid up or have calls in arrears, we have to take the shares, we have to take necessary steps to make them fully paid up or forfeit the shares. This possibility, this step we have already discussed a few minutes back. Then coming to the concept of divisible profits. What do you mean by divisible profits? Divisible profits are those who are otherwise available for payment of dividend. For example, credit balance in P&L account, general reserve, dividend equalization reserve, or any other such free reserve. These are called as divisible profits, and these are the only ones which are available for creation of CRR when you go for redemption of preference share capital. What is not considered as divisible profit is securities premium, capital reserve, revaluation reserve, existing capital redemption reserve, balance in share forfeited account, or debenture redemption reserve. These are few examples which are not looked at as divisible profits for calculation of CRR. Out of this, the last item, debenture redemption reserve, this is not a divisible profit only till the debentures are still outstanding. Once you redeem the debentures, once you repay the debenture balance, debenture holders amounts, when the debentures are redeemed, after that, this will become a divisible profit or this will become a free reserve. Thereafter, you can use it. But till then, till your debentures are outstanding, your debenture redemption reserve will also be considered as not available for creation of CR. Have you understood the calculation of CRR and the concept of divisible profits and what is available and what is not available? Any questions on this? Hello? Yes?
No, sir.
Shall we proceed?
No, sir.
Yes,
No
sir.
means shall we proceed or we should not proceed? What do you understand
Proceed.
by no? No more doubts. Is that so? Everybody has understood.
Yes, sir.
Okay, fine. Good. Now we have one more point before we go to the accounting entries. Now, sometimes you have preference shareholders, you complete the process of redemption and everything, but you find that there are some preference shareholders who could not be traced, or where the amount paid to them, the payment warrant comes back saying that address is not available, he has left that address or whatever. Or sometimes digital for digital payment. These days everything is digital payment, but for digital payments, sufficient details, bank details are not available. So in that case, what do we do? Whenever such situation arises that you have redeemed the preference share capital, but the preference shareholder is not traceable and you cannot pay that amount to him, it will be shown as a part of your current liabilities in the balance sheet. It will not remain then as a share capital. It will be transferred to current liabilities and you can call it as balance due to preference shareholders of redemption, because till such time they are not traceable, you can't pay them. And then you have to still carry forward that amount, entire amount due to them as part of your current liabilities. Is everybody clear about the entire discussion part? Yes?
Yes, sir.
I'll, yeah, I'll just run the entire note once again. Just go through once. I'll slowly scroll down. In case you have any clarity required on any point, please immediately raise the issue. Okay. You can unmute and immediately ask me. You can see the items on your screen. You can see the points on your screen. Wherever you have any difficulty so far, please come out. Then we'll go to the accounting entries. Read the whole thing. I'll share these notes once the lecture is over.
Sir, point number 6.
पॉइंट नंबर 6 में क्या डाउट है? CRR can be used only for issue of fully paid bonus shares. That is the purpose of CRR. What is the doubt? Who has a
Sir,
doubt?
fully paid bonus shares.
Yes, fully paid bonus shares. CRR can be used. So if you are issuing bonus shares of 100 rupees face value, you have to make them fully paid up bonus shares only. You can't issue as 100 rupees face value and 90 rupees paid up. That is not permitted. Same condition applies for CRR in the time at the time of buyback also. Okay, it's the same condition. So these are last 2 or 3 points, and then we'll go to the accounting entries. Shall I start with the discussion on accounting entries? Yes, can we go ahead with accounting entries?
Yes, sir.
Okay. Now, as far as the accounting entries are concerned, there are 3 or 4 areas for which you have to look at the accounting entries. If the preference shares are partly paid up, then you have to make them fully paid up. That could be one set of entries. Then there is a fresh issue of share capital. If that is involved, we'll have to pass the entries accordingly for fresh issue of share capital. Thereafter comes the redemption. So we will provide the amount payable on the redemption. We'll provide for the premium. Then we'll create CRR, and thereafter you can make the payment to the preference shareholders. And thereafter, if there is a bonus issue, then you have to make the entries even for the bonus issues. The entries are very simple and more or less on the similar lines what we thought or what we have done for buyback of shares. So once you understand the entries, you will feel that it's almost like buyback of shares. So first part, when the preference shares are partly paid up. So if it is a partly paid up share, you'll have to make the final call and the entry will be preference share final call account debit to preference share capital account. To make the final call to convert them into fully paid up shares, you have to make the final call by passing the entry preference share final call account debit to preference share capital. Thereafter, you will receive call money. So you'll pass the entry bank account debit to preference share final call. Now, sometimes you have already made the final call, only money is outstanding from some of the shareholders, which we call it as calls in arrears. So as I told you, you have to chase the shareholders, you have to ask them to pay that amount. And when they pay that amount, you'll pass the entry bank account debit to calls in arrears account. So already final call is made, amount is outstanding. And then you have to recover that amount. So we pass the entry. So these are the 3 entries which will help you to ensure that the shares become fully paid up preference shares. Have you understood first 3 entries? Yes. Have you understood or not? Hello.
Yes, sir.
Okay. Now, when you are planning to make them fully paid up shares, and in spite of that, some of the preference shareholders do not pay the amount, then we have to cancel their preference shares. We have to cancel those shares which are issued to them. We call it as forfeiture of preference shares. So for forfeiture, whatever amount they have paid, that will not be refunded and that is credited to a separate account. You don't repay anything to them. Whatever little amount they have paid earlier, that cannot be refunded. Now we cancel the preference share capital. So we debit preference share capital account to the extent of amount called up. I repeat, the preference share capital account is debited to the extent of amount called up on this in respect of these shares. Then we credit calls in arrears. So we cancel calls in arrears because you are canceling the share capital. You are canceling the shares. So that shareholder will not pay the amount of calls in arrears. So we have to cancel that. And whatever amount he has paid earlier, we are not going to refund that amount. So we credit that amount to forfeited shares or shares forfeited. So when you cancel the shares, when we forfeit the shares, we debit preference share capital for the amount called up on these shares. We cancel calls in arrears by crediting calls in arrears account, and we credit amount received to forfeited shares account. So the entry will be preference share capital account debit, 2 calls in arrears, 2 forfeited shares account. Now this amount of forfeited shares account, it's actually a capital profit for the company. You are not going to repay the amount received earlier from the shareholders, and that has been transferred to forfeited shares account. Since this is a capital profit, we usually transfer it to a capital reserve account. So there will be another entry, forfeited shares account debit to capital reserve account. In normal course, we do this entry, capital reserve entry, and after the shares are reissued. But here there is no question of reissue. You are going for redemption, so you don't have to wait, and you can immediately transfer that amount to capital reserve account. So whatever is received from the shareholders is first credited to forfeited shares, and then it being the profit of capital nature, it gets credited to capital reserve account. The next possibility is fresh issue of shares. Now, whenever there is a fresh issue of share, there are two stages. As all of you know, we have discussed this earlier also. First stage is when you receive the application money, the entry is bank account debit to equity share or preference share application money account. And when the shares are allotted, the entry is equity or preference share application money account debit to equity share capital or to preference share capital. And if it is a premium, then to securities premium account. So depending on whether you have issued the shares at par or at premium, the fresh issue either at par or at premium, you have to you have to structure these entries and credit the additional amount, if any, to securities premium account. Again, I am telling you, there are people who pass the entry directly, bank account debit to share capital. I am not at all in agreement with that particular shortcut because the Companies Act does not permit you to directly credit anything to share capital unless the shares are allotted. So you have to first park the money in application money account, and only when allotment takes place, you can transfer it to share capital. So I'm again insisting that you should pass these entries for fresh issue in two stages. First, credit the amount to share application money account, and then when the allotment takes place, transfer the money to share capital account. Now, there is a possibility that investments will be sold by the company because the company needs money. And if it is short of funding for redemption of preferential capital, the company may sell the investments. So you may have a possibility that the investments are sold. Entry will be bank account debit, the actual selling price, to investment account, that is the book value of investments, to P&L account, the amount of profit which you have earned on this sale. If there is a loss, you have to debit P&L account. If there is a profit, you have to credit profit and loss account. Any difficulty so far in the entries discussed?
No, sir.
Yes, Anu. Aradhana, कोई difficulty है?
No, sir.
No, sir.
Aradhana, no doubts, no? Okay, fine, good. Now we come to the redemption part. Now we have to pay the amount to the preference shareholders. So we pass the entry, preference share capital account debit, premium on the redemption account debit. This is the redemption premium, extra amount paid over and above share capital, to preference shareholders account. This is something like buyback only, if you remember the parallel entry in buyback. Now, if you are paying premium, as I told you, this premium has to be compensated from divisible profits or free reserves. So we pass the entry divisible profits or free reserves account debit to premium on redemption account. That is one of the requirement of redemption. Then we have to create CRR if your fresh issue is not there or fresh issue is not sufficient to complete the redemption. So we pass the entry divisible profits or reserves account debit to capital redemption reserve account. This reserve account will be credited for amount of CRR. And then you can make the payment to preference shareholders. The entry will be preference shareholders account debit to bank account. Only after you comply all the requirements, release the payment to the preference shareholders, and that entry will be preference shareholders account debit to bank account. And then final set of entries will be for issue of bonus shares. These entries also we have seen in buyback of shares, utilization of CRR. Now in bonus issue, there are two stages. One is declaration of bonus, and the second one is allotment of bonus shares. When you declare the bonus, the entry is CRR or free reserves account debit to bonus to shareholders account. So whatever bonus you propose to issue, bonus shares you propose to issue, equivalent amount will be debited to CRR. or you can even use available free reserves for that and credit the total amount to bonus to shareholders. And after that, you allot the shares. The entry will be bonus to shareholders account debit to equity share capital account. Okay. Have you understood these entries now? Yes. Any difficulty on any of these entries? Shall I show you all the entries again? You want to go through? So कुछ doubt रहेगा तो you can ask immediately. You want to go through the entry just once for reference?
No.
Yes, sir.
Okay, I'll slowly scroll down from the top. Any difficulty with any of the entries?
No, sir. All clear.
Okay, good. I'll close this file and we'll start with couple of small sums today. Tomorrow we can take up the remaining sums, right? So I'll close this file. Can you see the screen now? Excel file?
Yes, sir.
Yes.
Okay, fine. I already shared these questions in PDF file. So we'll work on these first 2-3 questions as the time permits. I'll read out the question. It says A Limited plans to redeem preference shares at 5% premium. The details as on March 22, 31st March are given. We have 10 lakh equity shares of 10 each fully paid up. Amount is 1 crore. That's the equity share capital. We have 2 lakhs, 6% preference shares of 10 each fully paid up, 20 lakhs. Then there's the general reserve of 10 lakhs, capital reserve of 10 lakhs, and P&L account credit balance of 16 lakhs. We have to pass the necessary entries if the shares are redeemed on 5th of April 2022. Now, you are given the situation of capital as well as reserves. You are not given anything about the new issue. So we'll assume that there is no issue. We will consider new issue, fresh issue of shares only if details are provided in the question. Otherwise, we'll ignore the fresh issue. Now, since fresh issue is not there, we'll have to presume that entire redemption will be out of profits, out of divisible profits. Now, which are the divisible profits which we have? General reserve is 10 lakhs. P&L account credit balance is 16 lakhs and there is a capital reserve as per the balance sheet, which is 10 lakhs. Out of these three, capital reserve is not a divisible profit. If we recall our discussion, this will not be available for redemption or CRR. It's a capital profit, so we need to ignore this when it comes to the CRR. That means we have option of general reserve and credit balance in P&L account. If you total up, it comes to 26 lakhs. Out of these 26 lakhs, how much do we need? We need 20 lakhs for preference shares and we need another 5% premium. So how much it comes to? 1 lakh rupees will be the premium. 5% premium on 20 lakhs will be 1 lakh rupees. So we have to pay in all 21 lakhs. And for this 21 lakhs, we can use a combination of general reserve and P&L account. We need to draw together 21 lakhs from this. Out of the 20 lakhs will be for CRR and remaining 1 lakh rupees will be towards a premium on redemption. So total 21 lakhs will be taken out of these two reserves, which are aggregating to 26 lakhs. Have you understood this calculation part first? Then I'll start with the entries. A very simple sum actually, just basics to understand. Have you understood the calculation what I discussed and the pattern of utilization of reserves?
Yes, sir.
Okay, shall we start with the entries then? Okay, prepare the format of
Yes,
journal.
sir.
Yes, sir.
Yeah, prepare the format of journal. We'll prepare the journal including bank entries along with the narrations. First couple of sums we'll write the narrations and then we can skip the narrations. Exam will have to write the narrations. Okay, prepare the format of journal. I hope you're ready with the notebook and everything.
Yes, sir.
Okay. So I'll wait for a minute for you to complete the format of the journal and then we'll start. I'm also posting a link for Google form. Okay. And in that Google form, you can record your attendance. So I'll keep that attendance thing open till the end of the lecture. I'll just copy the link there. Can you see the Google form link?
Yes, sir.
Okay. So Once we are through with the lecture, you can fill up the Google form, no problem. Just wait for a while. Let's complete the entries and then you can. I'm just posting the link there. Okay, shall I start? Okay, so first we'll pass the entry for redemption of preference share capital. So my first entry will be, there is no fresh issue. There is no requirement to convert the shares into fully paid up. These are already fully paid up shares. So first entry will be 6% preference share capital account debit, premium on redemption of preference shares account debit to preference share holders account. Okay, so my capital is 20 lakhs. My premium is 5% and my total amount due is total of these two. So 21 lakhs is payable. I'll write the narration. Being amount due on the redemption of 2 lakh, 6% preference shares of 10 each at 5% premium. Have you understood this first entry? Yes.
Yes, sir.
Okay.
Yes.
Now, since we are doing it out of profits, we'll have to create CRR. So I'll pass the next entry for CRR. General reserve account debit. P&L account debit to capital redemption reserve account. I have to draw 10 lakhs rupees from general reserve. I have to draw another 10 lakhs from P&L account. I have sufficient balance there and I will credit 20 lakhs to capital redemption account. Big utilization of divisible profits for creation of CRR. Have you completed these two entries? Yes.
Yes.
Shall I go to the next entry?
Yes, sir.
Okay. Now we created CRR, but we have not provided premium of 1 lakh rupees, which needs to be done before we pay off. So we'll pass that entry. Now for this premium, we don't have balance left in GR, but we have still balance available in P&L account, credit balance. 16 lakhs was there. Out of that 10 lakhs we have received, but we can still use another 1 lakh rupees for redemption premium. So next entry will be P&L account debit to premium on redemption of preference shares account. So I'll debit P&L account for 1 lakh rupees. And that's how I'm providing the premium on this redemption. Being premium on redemption provided out of divisible profits. Being premium on redemption provided out of divisible profits. So have we completed the requirements? Can we pay the shareholders now? Did we complete all the requirements? Yes or no?
Yes.
Okay. So we can pay off the preference shareholders because CRR is already created. It was out of profit, so CRR was done. Premium on redemption is also provided, so that part is also taken care of. So last entry, preference shareholders account debit to bank account. So 21 lakhs is a payment made. Being payment to preference shareholders on redemption. Any difficulty in the entries in the first question?
No, sir.
Everybody has completed all the entries?
Yes, sir.
Yes, sir.
Okay.
Yes, sir.
किसी को डाउट है, कोई पीछे रह गया, कुछ कंप्लीट करना बाकी है, ऐसे कुछ है?
No.
Okay. I'll proceed
No,
with the
sir.
second. Yeah. I'll proceed with one more question and then we will stop for the day. छोटा question है, simple है. Y Limited proposes to redeem 90,000 7% redeemable preferences of 100 each, fully paid at 10% premium. The balances are general reserve is 65 lakhs 25,000. This is general reserve. Company issued 33,750-8% redeemable preferences of 100 each at 2% premium for cash, and the entire issue was subscribed. The preference shares were redeemed on 10th April. Entries for this. Okay. Now here we have a redemption amount of 90,000 7% preference shares, which will be redeemed at 10% premium. The only balance available with us is general reserve, which is 65 lakhs 25,000. But you are going to make a simultaneous issue of 33,750, 8% redeemable preferences of 100 each, which is a 2% premium for cash, and the entire issue is being subscribed. So we have to do the redemption partly out of fresh issue and partly out of divisible profits. So we'll make a small calculation just to understand, okay? And then we will work out. So I'll make a small working note here. Particulars. Face value. Premium. Okay. Now we have to redeem 90,000 7% preference share capital. Okay. And these are 100 rupee shares. So this is 90,000 multiplied by 100. It comes to 90 lakhs. And we have to pay premium on this at 10%. So premium will be 9 lakhs rupees. Have you understood the calculation? 90 lakhs
Yes,
face
sir.
value and 9 lakhs premium. Now we have fresh issue Fresh issue is 33,750, 8% preference share capital. Okay, so 33,750 multiplied by 100 will be my face value. And I'll get premium on this. My premium is 2%. I'm getting 2% premium on this. I'll call this as A. I'll call this as B. Any difficulty so far?
No, sir.
No,
Okay.
sir.
Yeah. Now see here, my face value is 90 lakhs for redemption, and my fresh issue face value is 33,75,000. So that means I will have to create CRR. So my CRR will be equal to A minus B. My CRR will be equal to A minus B. To that extent, I will have to create a CRR. So my CRR amount is 56 lakhs 25,000. The difference between two will be my CRR. And how will I create CRR? So I'll write here source for CRR. I have only one reserve, general reserve. So general reserve से मुझे कितना use करना चाहिए? 56 lakhs 25,000. That will be from general reserve. I have a general reserve of 65 lakhs 25,000. And then I have to also provide for premium. So redemption premium. So general reserve for CRR and then general reserve for premium. General reserve for premium will be 9 lakhs rupees. I'll have to use it to the extent of 9 lakhs. So total, how much it comes to? I think we are going to exhaust the entire amount of general reserve. So this will, yes, 6525 total general reserve will be utilized. Will not have any balance left in general reserve. The entire amount of general reserve has to be utilized for this purpose. Have you understood the calculation?
Yes, sir.
Okay. Have you finished the calculation note? Then I'll proceed with the accounting entries.
Almost, sir.
Yeah, I'll wait for a minute, then we will do that. Okay, can I start with the accounting entries?
Yes, sir.
Okay, so first entry will be fresh issue is what we are going to do. These are the details for fresh issue. It is 33,750, 8% preference shares. That's what is given to us. So we'll pass the entry for fresh issue. bank account debit to preference share application money account. Total amount received is 33,75,000 plus 2% premium 67,500. So this is my total amount received. Being application money received for issue of 33,750, 8% redeemable preference shares of 100 each for cash at 2% premium. So this is the amount we received as application money. Now we will complete the allotment process and will pass the next entry. Preference share application money account debit to 8%. Share application money account debit to preference share capital to securities premium account. So total amount is so much. Out of that, capital is so much and premium is 67,500. Being allotment of 33,750, 8% redeemable preference shares of 100 each at 2% premium. Just add one word here for cash. So we received the application money. We completed the process of allotment. Any difficulty in these two entries?
No, sir.
Okay. Now we will go for redemption. We already have the calculation of redemption here. 90 lakhs is the amount payable for face value and 9 lakhs is the premium payable. So our next entry will be, these are 7% preference shares. 7% redeemable preference share capital account debit (7% redeemable preference share capital account debit, premium on redemption of preference share capital account debit to preference shareholders account. So our face value is 90 lakhs. Premium is 9 lakhs. So total amount payable will be 99 lakhs. amount due on the redemption of 90,000 7% preferences of 100 each at 10% premium. Okay, so we are going to pay 99 lakhs for this. Now, two things we need to do again. First, we have to create a CRR because partly it is out of CRR and then partly it is out of fresh issue. Fresh issue we have already accounted. We have to also provide for these 9 lakhs of premium. Okay, we can even pass one combined entry for that, and the entry will be general reserve account debit to capital redemption reserve account to premium on redemption of preference share capital account. So CRR requirement we already calculated. Our CRR is 56 lakhs 25,000. 9 lakhs is a premium that we are going to pay out of this general reserve, and total general reserve utilized will be this plus this. So 65 lakhs 25,000. That is the maximum balance we have in general reserve as the question says 6525. So only to that extent we have wiped out the entire general reserve in the process. So general reserve account debit to capital redemption reserve account 56 lakhs 25,000 to premium on redemption of preference share capital 9 lakhs. Any difficulty in the entry?
No, sir.
Okay.
No, sir.
With creation of CRR for redemption of preference share capital and provision for redemption premium out of divisible profits. And then last entry for payment to preference shareholders. So we can now pay the preference shareholders. So it will be preference shareholders account debit. To bank account. The entries being payment to preference shareholders on redemption of 90,000 7% preference shares. Has everyone understood all the entries, completed all the entries? What is the status? Yes, any difficulty?
No, sir.
Has everyone completed also?
Sir, just for 5 minutes.
Yeah,
2
yeah.
minutes.
Take your time to write, no problem. I'll wait for 5 minutes. I'll stop the recording, but okay, because we have discussed everything. So let me conclude the recording.